Hey, I'd like to welcome you to another episode of Mission Matters. My name is Adam Torres, and if you'd like to apply to be a guest on the show, just head on over to missionmatters.com and click on Become a Guest to apply. All right, so today I have Bill Neville on the line, and he's a business development manager at the Entrust Group. Bill, welcome to the show.
Thanks for having me.
All right, Bill. So excited to get into today's topic. So we'll really be talking about the ins and outs of self-directed IRAs, what investors need to know, what makes them different from traditional IRAs, or I should say the IRAs that most people have heard of, because I was just thinking back, we haven't talked about self-directed IRAs on the show in a while. So excited to get into this topic. And just to get us kicked off, Bill, maybe tell us a little bit more about your background and how you got started on this path to working at the Entrust Group.
Yeah. So I started with Entrust a little over 10 years ago, and I was hired into a position at the time that was called Manager of Franchise Operations. So the owner of our company, and Entrust has been around for over 40 years, the owner of our company at one time had established these business relationships with some other business owners where he helped them get into the self-directed IRA world. And he essentially had licensing agreements that turned out to be more of a franchise operations he was inadvertently running. And so when I came on board, this set of businesses that were operating as franchises, they were their own businesses, but they were utilizing our back office support and some other things, and they were essentially paying the owner of our company a franchise fee. And so when I came on board, the franchise program had been going on for a while, and they had, this position open up for Manager of Franchise Operations. And I had kind of a varied background in the business world. I had done a lot of different things, everything from managing truck drivers with an oil company to doing what's called recovery auditing to, being in finance. I had just a wide background, and I made for a good fit in this position. And then I was in it for about 6 months when the owner of our company decided that he didn't want to have these franchises anymore. He didn't want to be operating this franchise program. So he ended up selling them their franchise agreements. They bought out their franchise agreements. And, well, if you don't have a franchise of operations, you don't need a manager of franchise operations anymore. So they moved me into a position where I was overseeing our compliance and internal audit for a few years, which was a great position for me to be in to learn the business and get a good background and understanding. And I really liked the company and the service we provided. The position itself I wasn't crazy about it. And so we had this business development manager position that was open, and I had expressed some interest in it, told him I thought I'd be pretty good at it. And so this is what I've been doing for the last, 5 or 6 years since I got into it.
That's awesome. What a story. And there's some people listening right now that are maybe considering a career in finance and different niches and different opportunities that are out there. And one of the reasons I asked you this question is because, as people look at, finance and just investments, there's so many different ways to go. And you happen to take a self-directed IRA route. What kind of advice would you give maybe to that younger audience that's out there listening? Maybe they're just graduating college and they're thinking about different options in finance. What kind of things would you tell them?
Well, I guess for all the time that I've been in the business world, like I said, I had a pretty winding path. And so I think that not necessarily specifically finance related, but just general sort of business world related or career related is don't necessarily be locked into one specific area or one specific path. You never know what position might lead to the next position, and that's really very much what happened to me. Also, I guess the other thing that I really had to learn is to be most focused on really actually enjoying what I do as opposed to what it was paying me. That was a hard lesson learned. But I had a number of positions I was in that I really just really didn't like all that much, but it paid bills. And I finally got into something that not only do I like what I do, but I actually really think that what we do as a company is valuable. I think there's true value that people should know about it. And since ultimately my role has been in anything to just explain to people like what it is our company does, what is a self-directed IRA, and I genuinely believe that people should know about it. It makes it easy to do my job, because I like talking about it. I like telling people about what a self-directed IRA is and what all the options are for you.
Awesome. And I think that's a great transition. So let's just go further into today's topic. So self-directed IRA, for those that haven't heard of it yet, maybe they've heard of it, but they don't know exactly what it is. Tell us a little bit more about the product.
Yeah. So if you hear the term self-directed IRA, that term self-directed is a description of the service that the custodian provides. It's not a type of account. So when you have a retirement account, whether it's an IRA, whether it's a 401k, it requires you to have your account with a custodian. And that custodian is going to be a financial services company. And the majority of people who have retirement accounts, the custodian that they use is a bank or brokerage firm, Merrill Lynch, Charles Schwab, Fidelity, Wells Fargo, companies like that. They provide all the custodial and record-keeping services. They act as custodians for retirement accounts just like Entrust does. The difference between them and what most people consider when they think about an IRA versus a self-directed IRA, again, is in the service that's provided. In the case of those banks and brokerage firms, they will typically have advisory services. They'll have advisors on staff that will talk to you about what your risk tolerance is, what your goals are, what age you're at, and then they'll recommend certain investments to you. And typically those investments that they recommend are going to fall into the stocks, bonds, mutual fund market, right? Like they're going to have a list of funds that they, will say, okay, these 3 or 4 funds are really good to diversify you, or, these funds and maybe there's bonds and some stocks, or, but it's all going to fall under that general sort of definition of what we consider typical investments within retirement accounts, stocks, bonds, mutual funds. But in reality, the IRS actually allows you to invest in almost anything you want inside a retirement account. You could buy a rental property. You could invest in promissory notes. You could invest in privately held companies, ones that are not traded over an exchange. You can invest in precious metals. We've had people investing in cryptocurrency these days. Like you can invest in almost anything you want inside your retirement account, but you have to have your account with a custodian who's willing to process and hold whatever investment it is that you want to make. And that's the definition of a self-directed custodian. So the type of account that gets established with a custodian like Entrust is exactly the same as a custodian like Merrill Lynch, Charles Schwab, et cetera. You're still going to have either a traditional IRA or a Roth IRA or a SEP IRA or a 401k or whatever type of account that you want to establish. You have to establish that type of account. But with Entrust, since we're a self-directed custodian, one, we do not give you advice. We do not sell you any investments. We don't recommend or promote any particular investment. It's up to you as the account holder to do all your own due diligence, find the investment you want to make, and if that investment falls into what we would call a non-traditional investment, a non-traditional asset, which is anything other than a stock, bond, and mutual fund, we'll process and hold that investment. As custodian, we will process whatever investment you want to make, as long as it doesn't violate any of the rules under the Internal Revenue Code, which we can talk about those in a little more detail. So that's the definition of self-directed is, one, you as the account holder make all your own investment decisions, do all your own due diligence without any assistance from Entrust as custodian, and two, you can invest in non-traditional assets.
Yeah, and one of the things I like about self-directed IRAs, and I think, when you think about like the Merrills or the other large companies out there, and when I talk to people about like different things, is to think about the IRAs, it's not the investment. It's really just a bucket that's holding all the different investments in it. And there's many different types of these buckets, so to speak, where you can hold different investments in them. But the thing is that why, because some of the companies that you may be with currently, like if you're with, they may not do a self-directed IRA, it doesn't mean that there's any difference in terms of, like the account itself is not directly correlated to the risk of the investments inside. So for example, if you want to put a piece of real estate or if you want to do something else, like, and again, not to give investment advice or tax advice, because there's going to be different things that happen when you do this, but the idea is that it's just the account type, so it's giving you more freedom. So that means that if you're, let's say you call your brokerage firm and your current brokerage firm and you say, hey, I want to buy this investment property and I want to put it in my IRA. And they're like, well, we don't do that. That doesn't mean it can't be done. That just means that they don't do it. And it doesn't mean that, that there's anything incorrect or that you're doing anything outside the bounds of what the IRS allows you to do. So meaning these laws, these rules are there in place, like for you to benefit from, I would argue. So like you can still get it done. You just have to find the right company that you trust and that has a track record and that you know is capable of holding the assets. Am I off on any of that, Bill? Because I feel like sometimes people get a misconception of like risk and the account type, and it's like, no, just because it's self-directed IRA doesn't mean it's more risky. It's just an account type. It has nothing to do with risk. It's just holding the asset.
I agree. And when people, in particular, when people hear the term alternative or non-traditional investments, and people immediately think risky. But an example of an alternative or non-traditional investment inside a retirement account is like gold, precious metals. And inherently, precious metals tend to be a more conservative investment within, as opposed to stocks, bonds, or mutual funds. So alternative just simply means, or non-traditional just simply means other than stocks, bonds, mutual funds. Is investing in real estate inherently more risky than investing in the stock market? I would say the opposite. But that would still be considered a non-traditional investment inside a retirement account because most banks and brokerage firms, really all banks and brokerage firms, are unwilling to hold it as an asset inside the retirement account. And that's what makes it alternative again, most people think the only thing you're allowed to invest in are stocks, bonds, and mutual funds because that's all that the brokerage firms are willing to process and hold inside a retirement account. But, as you mentioned, you've always been allowed to invest in all kinds of other things. And no, just because it's got the word alternative or self-directed does not necessarily imply more risk. Now, it can. I mean, certainly if you're investing in a privately held fund that, doesn't necessarily have the record or background of maybe a Vanguard or Putnam fund or something like that, or you're investing in a privately held startup company, is probably going to be inherently more risky than investing in like Apple stock or something like that. I mean, there are certainly some examples where it would be considered, a more risky investment, but yeah, by definition, just saying, well, it's an alternative investment and it's a self-directed IRA means it's more risky is a faulty reasoning.
What are some of the most important rules or even just considerations that prospective self-directed IRA holders should know? Well, yeah, I mean, there's this rule around what's called self-dealing, which essentially says that there are certain people who are considered disqualified persons to the retirement account, and those people can't benefit directly from the investment held inside the retirement account. And I'll tell you who the disqualified persons are, and then I'll give some examples of what would be considered prohibited transactions. So the account holder themselves are a disqualified person to their IRA, as is their spouse, as is their ancestors, so parents, grandparents, et cetera, their lineal descendants, so children, grandchildren, et cetera, and then spouse with lineal descendants. So the most obvious example, the easiest way to give examples of what's a prohibited transaction inside a retirement account is, let's say you want to buy an investment property. You're going to buy a property inside your retirement account. The IRA is going to own the property. It's all done inside the retirement account. Those people that are considered disqualified persons aren't allowed to ever use the property for personal use. It has to be for investment purposes only. So you can't buy your kid a property then. Yeah, like you can't say, hey, I'm going to buy my son a house. I'm going to put in my retirement account and I'm going to get the tax benefits of that. No, it's your son. You can't do that. Right. Or if you have a child in college and you think, well, I'm going to buy, I'm going to use my IRA to buy a house up in, this university and let my kids stay there. Pay rent, not pay rent, doesn't matter. The kid can't stay there. A disqualified person also can't do any sweat equity onto the property, can't put any physical labor into it. So if you own a property in your IRA and you need to get the grass cut or you need it painted or anything like that, you got to either pay a neighbor's kid or hire a contractor or somebody to do the work. But your spouse, your ancestors, your own descendants aren't allowed to do it yourself. The same way, and just like the most frequent question I get asked is when it comes to real estate is, I already have a rental property. How can I get it in my IRA? The answer is you can't.
because you already own it. You're a disqualified person. Like, you can't simply place it into your IRA. That would be considered an invalid contribution. And your IRA can't buy it from you because you're a disqualified person to your IRA, right? Like, technically, the only way you could get it done is you'd have to divest yourself of the property. You have to sell it to a third party, and then your IRA could turn around and buy it from that third party. But even then, if you, depending upon how long it took to turn around and buy that property, you could be creating what's called an indirect prohibited transaction. Even though it didn't happen directly, the fact that you basically sold it to a third party in order to turn around and have your IRA buy it would still be considered. Logistically, it would work. Like, we would process the transaction because we wouldn't know that you previously sold the property to or you owned the property previously. But the fact remains that if it ever got audited, that'd be considered a prohibited transaction probably. So those are sort of, I guess, what's most important to recognize is that when it comes to retirement accounts, any investment done in the retirement account has to be only for the benefit of the retirement account. The whole point of making investments in your retirement account is to grow the retirement account. It's not so that you someday can take withdrawals and have money to live off of, on top of whatever type of, Social Security or whatever else. It's not to provide you an immediate benefit. Another example is you can't use your IRA to loan yourself money. Like, you can't borrow money from your IRA. You can borrow money from a 401k. That's a little different. But you can't borrow money from an IRA. That's considered self-dealing. So those are a few of the examples.
That's great. And Bill, I know that we just barely scratched the surface on what people can do with self-directed IRAs, and I definitely want people to follow up and to connect with you and your team so they can run their specific questions about compliance, types of investments that they're able to, the self-directed IRA can hold, and their scenarios, because we both know everybody's like individual investment needs are going to vary, and in terms of what they want to do. So if somebody is listening to this and they do want more information, what's the best way for them to connect with you and your team?
Well, I mean, we have a website which has a ton of information on there. We have a learning center on there that not only offers a lot of information about self-directed IRAs, but also we brought in some guests we've got webinars. We brought in guests to talk about different types of alternative investments, including real estate, including promissory notes, tax liens, trustees, like all kinds of different stuff. So I would start with referring people to our website, which is the Entrust Group. So we are the Entrust Group, theentrustgroup.com, www.theentrustgroup.com. And then as far as me personally, my contact information is on there. If you look for contacts, I'm one of 4 business development managers with Entrust. You can find me there. But all of our emails are our first initial and last name at theentrustgroup.com. So for me, it would be B Neville, B as in Bill, Neville at theentrustgroup.com. Our phone number is on our website, but I'll give it with my extension. So direct number is 510-587-0950, and my extension is 237 if you want to call me. But again, we do have a lot of good educational information and educational content on our website. So I would steer people there, first above everything else.
Awesome. Well, Bill, really appreciate you coming on the show today and sharing more about your background, how you got in the industry, and also, of course, all the great work that you're doing over at the Entrust Group. And to the audience, as always, thank you for tuning in. Hope you got a lot of value out of this. Hope you learned a lot. If you did, don't forget, hit that subscribe button. We have many more mission-based entrepreneurs, executives, and experts coming on the line, and we don't want you to miss a thing. And Bill, thanks again for coming on the show. It's been a pleasure.
Thanks for having me.